what should be the ideal mindset of investors right now?
Should we be buying puts to hedge our portfolio?
If I am to think about how a war is affecting our economy, what I'm thinking is our expenses are increasing for our government. Expenses are increasing.
Yeah.
At the same time, income is reducing.
Yeah, Reliance is getting blasted now. Jio Studios try to take a trademark for Operation Sindoor. They have come out and clarified that an intern or a junior employee has done it and they've withdrawn the application.
We are seeing with the trade war situation, with the Russia-Ukraine situation, we are seeing gap downs of 5%. And we are saying, historically, whenever India-Pakistan issues have happened, right from Kargil war till the Pulwama case, across the history, never ever Nifty has even moved down by more than...
So everyone watching this show today, and even all of us here in the room, we know what is happening in India over the last 1 week. And it's a pretty serious situation. So if you're looking at how Nifty is reacting to it, we expected a huge gap down today. But Nifty gap down by around 2%, recovered and is now around 1% as we are recording. The India VIX or the India's volatility index is higher though. It is now at 22-23, which is on a higher note.
And in this uncertain times, there are investors who are very much panicked about what can happen to their portfolios, because we've seen Nifty recently giving a 15-16% dip and it has moved up. But again, now when things starts escalating, war talks are in place, investors are very much panicked. What can happen to their portfolios? How can they hedge their portfolios? What should they do? That is one concern. And then there is, on the other side, traders being very excited about. There is a lot of volatility. We can make better use of it, of the volatility, and make money. So that could be a double-edged sword. So I want us to understand both scenarios. What should be the traders be doing in this scenario? What should investors do? And also let us also try to understand previous patterns of uncertainty when India is in this kind of situations, and try to understand how it could impact our economy as well.
Yeah.
So let us individually dive into each individual topics, each individual sequence, and understand.
Yeah, so that's where we can start today's episode, the 25th episode of the Aftermarket Podcast. My name is Ajay Ajit. This is Nihal Bandapalli.
Hi.
And this is Sharik Shamsin, CEO and co-founder of MarketFeed.
Hi.
So the very first thing, let us understand the previous patterns, because we know market runs on a historical cycle. Whatever happens in the past, that is like to again happen in the future as well. So what happened during Kargil wars or Mumbai attacks or Uri attack, the surgical strike we did, there are uncertain times that happened in the past in the history also. So let us try to understand how did market do and those periods.
I know the times are uncertain and we should definitely talk about what is happening to the market, what could happen to the market. And like you rightly asked, what has happened in the market in the past when uncertain times and Indo-Pak tension has happened. But I think always when times are uncertain, in the cases of war or battle between nations, there is a strong feeling for humanity which has to come out first, right? I mean, I think we should also be discussing that before we get into historical analysis or economic analysis or stock market analysis. It is definitely sad as to what is happening. And I always remember this quote or this saying by Albert Einstein. He did say that if there is a third world war which is going to happen, we can never be sure of what humans are going to fight with.
Yeah.
But if there is a fourth world war which is ever going to happen, then we can be certain that humans will be using stones and axes, because third world war will be so brutal that entire humanity could get hit. I'm not saying such escalation is going to happen, but I think war or battles or any such kind of escalations is definitely not good for any parties involved for any economy or market or humans, which are definitely. And there are also quotes coming around saying that we are living, how do I put this, in very safe places, and we haven't actually seen war, none of us. And I hope none of our viewers, listeners also, right? Only people who have actually seen that happening, gone through it, really know the terror of war. So us sitting here and commenting on it, talking about it is very distant from reality. And I really need that to kick in, to sink in. And I'm sure, I mean, all of us are going through it. The viewers are also going through it. They're also reading stuff which are happening. But then there is a real human angle and side to whatever is happening. But I really wanted that to be a part of the podcast before we move into serious stuff, which also requires discussions during times of uncertainty. But now let's get into it.
So, completely agree, Sharik. And now I'll quickly get into what happened in cases of previous conflicts or heightened tensions across the country. So Kargil war, if you're looking at 1 week, what happened in the market, Market went up by 9.64%, surprisingly. Attack on Parliament, that is in 2001, market went down by 2.5%. Then there were multiple attacks in between, multiple blasts. Even the recent Pulwama attack, we saw the market going down by 1.75% over a period of a week.
Yeah, so one thing which we can notice there is right from Kargil war to the recent Pulwama attack across near 5-6 incidents between India and Pakistan. In none of the cases there was a one-day movement in Nifty, which is post the event. None of the cases Nifty fell down by even more than 2%.
Yeah.
Not even a single case.
Yeah.
Which is kind of indicating that Indian market is not taking Indo-Pak tension or issues, not even tension, escalations, slight attacks seriously. Market has not historically reacted hugely to such incidents.
Yeah, and I'll put up the table here because this is very important for an audience or a viewer to understand how the tensions could affect the market in the coming days also, right?
Yeah. So that's where I also remember very vividly back in 2022 when Russia-Ukraine war just started. I remember our market Nifty gap opening with a gap down of more than 5%.
Yeah.
And that's that is in 2022. But even recently, if you see a month before, which is in April, we saw the trade war issues happening and US coming out and announcing the tariff, and then Nifty opened with a gap down of nearly 5%.
Yeah, that Monday I clearly remember.
Yeah. So we are seeing with the trade war situation, with the Russia-Ukraine situation, we are seeing gap downs of 5%. And we are saying historically, whenever India-Pakistan issues have happened, right from Kargil war till the Pulwama case, across the history, never ever Nifty has even moved down by more than 2%.
Yeah, even
so that
in the
really is intriguing my curiosity. It's making me think why is the Indian market not reacting to Indo-Pak issue but reacting hugely to tariff war and Russia-Ukraine and to other wars where India is not even a direct party involved.
Even during 9/11, which is a 2001 attacks in the US, Indian markets that month was down by 18%, September 2001. So it's a clear pattern. I think the difference here is that these are maybe acts of terrorism or acts of war. That's how we term it. But it's not an actual declaration of war. And things have not escalated into a situation where both countries have gotten into an actual war. Even Kargil was a conflict. I think that's what the market is also banking on even this time.
Yeah, and in all of these situations, maybe the attacks were at a very concentrated, smaller places where it wouldn't impact the whole economy. So maybe that is the reason markets wouldn't react much. But let us say in an example of a trade war or a Russia-Ukraine war where the whole global trades could affect. And that is where, the money flow can be affected. The basic fundamental revenues of countries can affect. That is where maybe our markets reacted a lot more. But even in this all uncertain times, when you're saying markets did not react more than 2% or so, we should not neglect the fact that we are looking at the closing prices. But intraday volatilities can be huge. There could be 2-3% fall and then 2-3% up, and net to net at the end, probably the closing could be 1-2%. So traders should still be aware. So now that we understand how the markets could be volatile and understand all of this, there was one point which I brought in, right? The fundamental angle of any economy being taken a hit. So let us try to understand if a country ever goes to a war. So now I know, like you said, right? People who are actually in that war zone only understands the impact of war and they never want to go into war. But there are actually is a lot of patriotics who are like, let's go to the war with Pakistan. Let's, blast them and do whatever. But that will take some amount of hit on our GDP, on our revenues, on our people. It could slow down our growth also. So let us try to understand what is the actual cost of going to a war.
So again, just reminding that even right now and in the cases of previous conflicts also, there is hope and optimism that it will not go into an all-out war, right? That the effects that we're going to discuss now will not actually happen in the market. And that's why markets also react that way. That's why they don't go down, because markets are intelligent, right? If they sense any fear or any problem, they'll surely be the first ones to react. Even before the GDP numbers, even before the inflation numbers, market will react. But let's quickly look at what is the cost of war, right? So the number that we have here is number from the recent Russia-Ukraine war. So what is being said there is nearly $500 billion, $500 billion is the total cost of the war which is coming out from Russia and Ukraine side. $500 billion is approximately what? 40 lakh crore rupees? That's huge. That's crazy of a number, right? And per day, every single day, Ukraine is spending nearly 1,000 crores on the war, excluding rebuilding costs, right? So imagine India spending that. Yes, we might be able to spend it, but again, it'll put a chokehold on all of our other resources.
Yeah. Again, what I can maybe chip in and say is the actual cost of war is very hard to derive because there is human life that is lost, then there is infrastructure that gets damaged, then there is actual money involved in buying machinery or weapons and whatever. So getting an actual cost is very hard. So whatever the estimates we are trying to do here is probably taking a defense budget or the spendings of Ukraine and then dividing it by the number of days and then giving an estimate. This is not an exact number that anybody can quote.
Yeah, even the 1,000 crore number which I said is, when you look at it, it's just 0.02% of our GDP per day. But then that has some multiple effects, which we'll discuss right now over the longer term. Yeah, so what we understand is the daily cost of war could be around 1,000 crores. This, again, that is Ukraine's number. No way saying that it could be India's number. It can be much higher because we are a much bigger country, right? But just to give context, the 1,000 crore number in terms of India's budget is 0.02% of our budget of the entire year, right? That's the per day cost of what could be a scenario where a war plays out. But again, as we all know, that is just an estimation. The real cost of war cannot be measured. There is a lot of economical and long-term impacts, as you said, which can come into the economy. And yeah, that's what it is.
Yeah, so what we just discussed now is the direct cost to some extent of a war, right? So if a war is happening or a conflict is happening, then the government has to spend directly on weapons and machineries and stuff, and that is maybe 1,000 crores or even more than that on a daily basis. What we do not see or discuss a lot in public media is the indirect cost of having a war. So just now we are getting to know there is lockdown across multiple cities in the north and west of India, right?
Yeah, multiple airports being closed.
Correct. So a lot of cities are not functioning, which are in lockdown, which means there's no business activities happening there. There's no economic activity happening there, which is eventually indirectly slowing down our economy. Right? There's no GST, because there's no business happening there. There's no productivity which is being generated from there, which is slowing down GDP. Then because there is no business happening, then there's no GST, which is slowing down tax collection. And a reduction in GDP, reduction in tax collection is only eventually going to lead to a slowdown in the development of the country overall. So there is an indirect cost which is coming in from business slowdown from all the areas which are slowed down because of the worries.
And this is what we've seen in when Pulwama attack also happened, right? People were worried about going to Jammu Kashmir and their major revenue source was tourism. So when that was it, the whole economy of Jammu Kashmir will take a hit, and like it is like a rippling effect on multiple states when we go on a full on war mode.
Exactly. So overall, if I am to think about how a war is affecting our economy, what I'm thinking is our expenses are increasing for our government. Expenses are increasing. At the same time, income is reducing.
Yeah, everyone thinks about the expense increasing mostly.
And income is decreasing in a direct money sense.
Correct.
And on top of it, I also want to add to the fact that all of the bureaucrats from multiple parts of the country is called to be in high attention and to contribute to whatever is happening, which means that our bureaucracy's focus and mental bandwidth is going into planning for whatever is happening and planning ahead to ensure if this gets escalated, then we are in a safe position, right? So because bureaucracy's focus and mental bandwidth is directed to war-related items, that focus and bandwidth, which I otherwise could have been used for developmental activities, to things which are good for our country. So that is not happening now.
So I understand that war is very taxing on your purse, your budget, your money, but it is also taking away a lot of your mind share, your time, your planning for future.
So even if you think about ourselves, right? I mean, right from yesterday night, I haven't been fully able to concentrate and focus on a lot of my personal work and business, right? Because there's also that part of the mind is constantly thinking about the country and what's happening and what could happen and stuff like that. So if it is this case with us, like commoners,
Yeah.
bureaucrats and people at the top, at the helm, planning for the country, working for the government, their mental share, their mental space would be very different.
Yeah.
And if they are in that mental space for a prolonged period, then we are missing out on a lot of developmental activities. That also, I think, is a cost which is coming from the war.
Yeah,
Yeah.
the $5 trillion economy dream that we were planning for and moving ahead. And in the recent budget also, the second highest allocation went into rural development. So, but now let's say the war escalates, it prolongs more. More of funds would be used into probably protecting our citizens, protecting our country rather than actually growing. So it is all a rippling effect, and it is never bad for any economy.
Yeah, there is a clear study saying that over a 20-year period, a 1% increase in defense budget could cause a 9% GDP fall, right? Or growth mismatch. So what is coming out here is India already spends more than 6.8 lakh crore every single year on defense. That is coming up to nearly 1.9% of our GDP. When things around us are not great, our neighbors are not playing fair, we will automatically try to protect ourselves more, and automatically, even if we say nothing will happen, next year the defense budget is going to be much higher. Let's wait and observe, right? So that could take away from other sectors like maybe rural development, education, highway building.
Yeah.
All of this could be impacted.
Yeah. And also there is also one more angle of, let us say, FDIs or FIs who are investing heavily in our economy, thinking of our progress. But in uncertain times like this, they will also be questioning if India can grow in that stage, and probably they might cut down on their investments into our country, right? So is there any chance probably we might take a hit on the FDIs or FIs investments into the economy?
Again, I'm super optimistic here that nothing of this sort is going to affect India and affect fresh investments. But the theory here is that if things are unstable in a certain region, new companies, fresh investments might not go in there. Very logical if you think about it.
Yeah.
And to put some data behind that logic, let's look at a study that has been conducted in Vietnam. Again, Vietnam, has had multiple wars in the past and also has internal instability as well. So there was a study which said that a 1% increase in instability, they
Yeah.
have a certain marker,
Yeah.
contributes to nearly 0.7% or nearly 1% fall in FDI or foreign direct investment. So this could happen theoretically if the country becomes unstable, which I don't hope it will be. I don't expect it to be. There could be a fall in fresh investments. Yes, that is theoretically possible.
Again, come back to the topic of what should be the ideal mindset of investors right now. So according to me, there is nothing to be panicked, is what I understand from our discussions. And also looking at the historical patterns, there is nothing much to be worried of. And they can continue their SIPs.
Yeah, so let's try to be as practical as possible.
Yeah.
India right now is not in an official war, as I said. Again, all the previous acts of war, the incidents which happened have not affected the market. And right now, the current situation is being treated like that. So the market is not reacting, and let's hope it stays this way.
Yeah, no, speaking about investors and how they should feel or what they should do, for me right now, what I'm thinking is Nifty is not even down by 1.5% from last week's high.
Yeah.
Which is what? A blip. It's nothing. I mean, there's nothing for an investor to be worried about as to what's happening now. The only worry is what if things could escalate and go really bad and market goes down. But then even then, what are the chances that this could escalate and turn into a world war sort of a situation where things can be really bad? I mean, if that's low, then your bet has been on the economy, your bet has been on India and India's growth and that story, then that is still intact. So I don't see any large worry in reducing SIP amount or booking profits and sitting out. I don't think that's really important. If someone's investing for the long term, then they should stay invested. Maybe if there is a large dip, can even use that as an opportunity, buy more, increase SIP amounts at that point. But otherwise, no large concern.
One suggestion that I would give generally is that there might always be few bad stocks, few shaky stocks in your portfolio. We are not saying that, hey, market is fine and those stocks will continue performing. In terms of such situations where money flow in the economy and the markets actually might reverse or might change directions, these bad stocks might be affected. So make sure your portfolio, especially in times like these, are filled with only good picks, things or companies that you believe in the long for the long term,
which are fundamentally strong again. And adding on to our optimism or our confidence into the markets, our Indian army also is standing stock and saying that we are retaliating in non-escalatory manner only.
Yep.
So we are not escalating stuff from our end. So as long as our stance is that there is nothing to be panicked or worried about, but there is still uncertainty, there is still volatility, and that is where the traders kick in. Traders want to make use of that volatility. Traders want to jump in, buy options, while the VIX, what we discussed earlier, is very high, 23, 24.
Correct.
So already the premiums are very high. So people are again buying options, and that too OTM options. And if, like what we are seeing, markets are stable, then the VIX is going to crash, the premiums are going to melt, option buyers are going to burn their hands. So what should actual traders do?
So we were also discussing just before this, should we be buying puts to hedge our portfolio? Again, not in a trader's manner, but to hedge our portfolio. So right now, Nifty's contract value says that for approximately a portfolio of 18 lakh rupees or 20 lakh rupees, you can hedge your portfolio by buying one put option, one lot of put option in Nifty. So again, depending on which put option you buy, if it's at the money, you'll get the maximum safety, the maximum insurance, but you'll be paying the most premium. Your insurance premium is high. If you're buying slightly out of the money put option, your insurance premium amount is lower, but your safety will be also slightly lower. Right? You won't be getting as much protection for your portfolio. So we were also discussing that.
That's true for investors, and that's also there, right? In terms of, see, it's very difficult practically for people to learn stuff and be perfect and then start acting. So what happens is people start out and they learn about investing, they invest. And once during these times of uncertainties where they can learn about hedging and how to protect their portfolio, and post-September, there was opportunity when markets fell. I believe people learned the concept of hedging, but maybe now are again times when they can either try to learn it better or even start exercising or using it in effect in their portfolio. But speaking about traders, like you rightly said, volatility is heightened. Market is moving crazily. Even today, as we speak, we are seeing market moving up and down in more than 150, 200 points multiple times, which can be, for good option traders, a good opportunity.
Absolutely.
So that the term good is very important. SEBI says 95% option traders lose money. So the sad reality could be a lot of option traders could lose money from the volatility. But then, hey, that's not why we are here for. I mean, I think our channel and our content has been helpful. So if someone has learned enough and is a good trader, then volatility is a good opportunity. Like you said, because IV is spiked, out of the money options itself, we are getting at higher premium. So a situation can be looked at as a threat or an opportunity. So for good traders, what I'm saying, it is an opportunity. So even if you're an OTM option seller, you can, if done right, you can make more money during such situations. But risk management should be even more important during such situations. But option buyers, they have to be careful because IV, if it starts coming down, they will see their position melting a lot. So maybe we can option buyers can think about even trading closer to the money, at the money, or even in the money. That could also be helpful.
And also one suggestion from my end, I would say is, do not carry any naked positions overnight. So if you're especially an option seller, because your risk is unlimited there, what if tomorrow there is a 5% gap up or a gap down? Who knows what can happen? The chance of a gap up is very uncertain, but chance of a gap down is very much certain.
Not certain, more probable. Fall is more probable.
Correct. So that
compared
is where
to
5% gap up.
Correct. But objectively, even that is less probable, right? A huge gap down is also
based on the data that we saw.
Yeah, based on the data we saw, and it could only happen if things are escalated to that extent.
Correct.
Where things are, where other nations are joining, or it's officially being called a war. Only if that happens is where even we are looking at a huge gap down.
But again, even if a 2-3% gap down is there, it could still affect their portfolio. So I would say, carry a hedge. So if you are doing a naked selling, just have a little far OTM option as a hedge. That will help your portfolio to not take a very big hit.
And in my personal opinion, again, I feel like investors, the outcome that came out is, try to invest more if you find good opportunities, good dips. Like that, one thing that investors plus someone who is a trader can do here is try starting to do or try learning about covered calls.
Correct.
Because this is a scenario where you're anyway not going to liquidate your portfolio. But the option premiums being higher means that you have opportunities which are present everywhere. And when IV increases, even the call premiums could increase.
Yeah.
So I'll put a link here on what is a covered call, how you can start it. But for someone who has decent capital I mean few lakhs in particular stocks, they
Yeah.
can start thinking about how to implement covered call strategies and to collect premium from the market.
So to put in perspective, maybe for individual stocks, you need at least 10 lakhs of holdings to do a covered call. And for index, it is again 20 lakhs like what Sharik said. But if your overall portfolio, even if you're a mutual fund investor, you're not invested in an individual stock, still you can do a covered call with Nifty. It will hedge your portfolio to some extent. But again, this is for big investors who already have a portfolio of 20 lakhs, 15, 20 lakhs at least. But if you, let's say, have 4 or 5 lakhs, I would say not very much. Anyway, it's not that panic in the market. So you can just take a sit back and relax. And there is also one more thing which should not ignore is what is happening globally. Not just about the war or the panic that is happening in India, but things that are happening in the world.
Yeah,
Yesterday,
markets might react more. Again, as we said, markets might have reacted more to a Russia-Ukraine war than
Correct.
what happened yesterday night. So again, we have to be very much understanding that even though all our news and all our social media
Yeah.
is filled with the current situations, there is also a lot of stuff happening across the world,
Correct.
which can affect the US market, which can affect the European market,
Yeah.
and which in turn could affect the Indian market also.
yeah, and yesterday Trump and UK, they signed a deal. Then US and UK also signed a trade deal. So that also we have to acknowledge and understand, because that will have a huge impact on our markets, because that can impact our economy as well.
Yeah, Fed held their interest rates. That's again, if it was a normal week, it might even have been one of our major topics here.
Correct.
Right? The Federal Reserve coming out and saying that they are not going to aggressively cut down interest rates, right? Which is typically not great for the market. Market likes lower interest rates.
Correct.
So all this stuff is happening around the world. I think we should be aware that, or be cognizant that, one, our entire social media will be filled with the war news, right? And in between that itself, there will be a lot of fake news that we should be worried about. And let's say you saw fake news and you decide to take a trade based on that. I'm talking purely for a trader. That's not great, right? You'll end up losing a lot of money. So make sure that all that stuff doesn't happen. And at the same time, also be understanding or watchful of international markets. As always, they impact our markets.
Yeah.
No difference there. So make sure you have that in the back of your head.
Correct.
Yeah, so just going back to how we started, right? It's okay to talk about investing and trading and opportunities here, but then I again really want to go to the human angle of this, and that's where I am just doubling down on what you also said right now, which is slightly about fake news and misinformation and how you could act badly on that as a trader. But that's where I would say, what is our responsibility as citizens of the country during this time, right? What we can do sitting at our home or office or where we are, very far away from where all of the reality is happening us. Maybe be responsible. Don't put out wrong opinions. Don't
Correct.
share fake information. Be sure of whatever information you're hearing. Maybe even if someone else is sharing something, even take that extra step. Normally, you might be a person who is not interfering someone else's life. Maybe this is a time which is okay, where it is okay to do that.
Yeah.
If you see someone else who is sharing information which you have verified is not true, maybe take that extra step, go to the person, tell not to do that. I think that is what we as citizens of the country can do during these uncertain
Yeah,
times.
and try not to take advantage of these situations. Like Reliance is getting blasted now because Geo Studios tried to take a trademark for Operation Sindoor.
Yeah.
They have come out and clarified that an intern or a junior employee has done it and they've withdrawn the application. But again, it's a clear situation where a company or an individual is trying to take advantage of whatever is happening in the country. So please make sure that each of our actions are very clear and calculated and we don't take any bad decisions in this time.
Yeah, and also I want all of our citizens to actually understand that while we are all emotional, we should also not lose on our logical thinking. We should also try to be more practical. I know everybody is emotional, everybody are patriotic, we understand, we feel the pain of everyone, but we should never in this situation cloud our judgments and not be practical. We have to be practical, we have to be logical in every situation possible, and just do not throw hate at anyone. So if somebody is supporting something or somebody is not supporting something, just understand why and try to understand the logic behind it and then react. Just because, let's say, even in our discussion we were saying, because we are not in the war situation, we are saying war is bad for the economy. Now people can come and actually bash us in the comments. Who are you to say that we shouldn't go war? We should go full-fledged war and destroy Pakistan. But that is where I want you to take a step back, relax, understand the whole thing, what we are trying to tell here. Then understand everything and then give your judgment.
Yeah, so I hope that everyone understood that what happened in the market in previous situations like this, and what can investors do in situations like this, and what can traders do in situations like this, maybe even few possible strategies if you're interested. So I think that's where we can wrap up the show.
Yeah, and before actually wrapping up our show, I really want to thank all our armed forces who are actually standing strong for us, defending our nation. Now, today, we are peacefully sitting here and doing this video only because there is somebody out there sacrificing their blood for us. So, we should be very thankful for their service. And we as a team, MarketFeed team, we salute all the armed forces that are standing strong for the country, for us. So, yeah.
Again, with a lot of seriousness and heavy or strong emotions on what is happening across the country. Fully aware, let's wrap up the 25th episode of the Aftermarket Podcast. This is Ajay Ajit signing off. See you all. Bye-bye.
Bye.
Bye.